If your portfolio looked like a crime scene this week, relax, you're not alone. Tech took a tumble. Microsoft down 4%, Nvidia off 7%, Oracle nearly 8%. After a year of AI-fueled euphoria, the market finally remembered gravity. But here's the part most people missed. While Silicon Valley was sulking, smart money quietly rotated. Walmart, Costco, Coca-Cola were all up. Healthcare had its moment with Lilly soaring 7%. Capital didn't run. It just changed direction. Today, we'll break down what really drove the week's rotation and take a closer look at Alphabet and Nvidia and unpack what these moves mean for the next leg of the market. And make sure you stick around till the end for our tip of the week, a mindset shift that could change how you view every market pullback from now on. Welcome to AlchemēWealth Weekly Insights, where we turn market noise into clarity. The S&P 500 slipped about 1%, the NASDAQ nearly 2%, taking a breather, not a breakdown. Defensive sectors flexed while tech cooled as investors shifted from hype to health. But the Bank of England held rates steady and hinted that inflation might finally be playing safe. Translation, the world isn't ending. The markets are just catching its breath. Sometimes that's when the best opportunities appear. Alphabet, or as most of us call it, Google, quietly outperformed this week, closing slightly up while most big tech looked like they needed therapy. In their last quarter, Alphabet posted $90 billion in revenue, up 12% year on year, and profits jumped a massive 46% to about $34.5 billion. Earnings per share climbed from $1.89 to $2.81. That's what healthy looks like. Search still dominates with about $50 billion in revenue. YouTube ads hit $9 billion as short monetization finally clicked. And Google Cloud grew 28% to $12.3 billion. But here's the headline most people missed. Alphabet's board authorized a $90 billion share buyback, one of the largest in corporate history, alongside a 5% dividend increase. That's management shouting, "We believe in our stock and it's undervalued." While competitors are loud about AI, Google is quietly weaving it through everything. Search, Workspace, YouTube, ads. Their Gemini model isn't a press release stunt, it's infrastructure. And when you control infrastructure for 60% of the world's online time through YouTube, Android, Maps, Gmail, and Search, you don't have to win every AI battle. You just have to stay in the battlefield. In short, this isn't a hype story. It's a cash machine story. And that's $90 billion buyback is Google effectively saying, if you won't buy us, we'll buy ourselves. Alphabet is another great example of why you need to separate the noise from the narrative. The stock market has a short-term memory and it's brutal. But companies that keep compounding cash, innovation, and user attention, these are the ones that win the decade, not just the week. And then there's Nvidia, the stock that has been living rent-free in every investor's head for 2 years. After an unbelievable run, it finally took a breath this week, sliding about 7%. The headline said, AI sell-off. I call it AI exhale. Let's look at why. Last quarter, Nvidia reported $28 billion in revenue, up 63% year on year, a net income of roughly $15 billion, up more than 75%. Operating margin, a casual 46%. Its data center division alone brought in over $22 billion, driven by record demand for AI chips from hyperscalers like Microsoft, Google, and Amazon. And the new Blackwell B200 architecture launching next quarter is already sold out for months. So yes, stock pullback, but fundamentals haven't blinked. Nvidia now controls roughly 80% of the AI GPU market and has quietly built a software moat through CUDA, which keeps competitors 2 steps behind. Here's the investor lesson. Every market cycle has a darling. Every darling will eventually test your conviction. The question isn't whether Nvidia is expensive. It's whether you believe AI infrastructure is a story that's still in the first innings. Because if it is, this week's dip isn't danger, it's a discount. Alphabet shows you the power of quiet consistency. Nvidia reminds you that volatility isn't always a villain. Sometimes it's just the price of owning innovation. Pullbacks are the market's way of separating tourists from investors. Tourists panic. Investors plan. If you know why you bought something, red days become rehearsals for green ones. Corrections aren't punishment, they're just preparation. Before I jump into the tip of the week, if this helped bring a little calm to your chaos, give it a like, share it with a friend who needs perspective, and hit subscribe so you can catch next week's wrap. I'm Ravi Naika. This is AlchemēWealth, and your tip of the week. Buy clarity, not comfort. Comfort comes at the top when everyone feels safe. Clarity shows up at the bottom when prices are ugly, but value is obvious. Investors who learn to act with clarity instead of waiting for comfort, they're the ones who compound wealth, while others wait for permission.